Welcome back to Bazaar Morning Call. Our entire research team is standing by to give you the list of top 10 stocks, and there are plenty to talk about. First up, Tata Power on our radar. It was a muted set of numbers this time. So Vivek is here to give us the fine print. Vivek, morning.
Well, good morning. As you mentioned, slightly subdued quarter from Tata Power this time around when you're comparing to our poll. But the earnings trajectory as well as the earnings trends this time around significantly different compared to what it was just a couple of quarters ago. So revenues higher by close to 3.7%, slightly below our poll, but coming in quite healthy at 14,651 crore. EBITDA higher by a little over 3.5%, slightly below our poll, but coming in over the 2,400 crore mark. Margins, flat on a year-on-year basis at 16.5%. Net profit up 2.3%. That is slightly beating our poll. Now, what's actually happened is that, till a couple of quarters ago, the analyst community believed that a majority of the profits were being driven, given the fact that Tata Power has a net long coal position due to the presence of the Indonesian mines. Now, this particular quarter, what's happened is 75% of the total profits have come in from the core businesses, just around 25% from the Indonesian or net long coal position, which is what has hurt the company given the fact that coal prices have dipped quite significantly. But despite that, the earnings trajectory has actually improved on the back of this particular contribution of 75%. Number two, what was key to watch out for was the 4.3 gigawatt solar module power plant, and that is on track. 2 gigawatt is already being commissioned. And lastly, the company has a very strong solar EPC order book, well over 15,880 crore this time around.
Okay, all right. Thanks a lot for that, Vivek. In fact, we'll have the management joining today on Bazaar at 10:15 a.m. later today. So stay tuned for that conversation. But let's talk about pharma names. Then Ekta joins us to tell us about Dr. Reddy's. Morning, Ekta.
Morning. Well, important and positive news which is coming for Dr. Reddy's this morning. The company's FTO03 unit has been classified as voluntary action indicated by the US FDA. It was inspected from 19th to the 27th of October and was issued 10 observations at that point in time. So the street was fearing that there would be some escalation of that, but the company has informed the exchanges that they have received an establishment inspection report with a VAI, which is a voluntary action indicated status by the US FDA, indicating that they can continue manufacturing from this unit. And remember that it contributed around 30% of the company's US revenues, this particular site, and hence it should be a relief for Dr. Reddy's today.
All right, Ekta, thanks very much for that. Let's talk about ONGC next. Sonia? All right, I think Sonal is with us to run us through the details on that one. Sonal, hi, morning.
Good morning, Prashant. Well, ONGC was largely in line with what the CNBC-TV18 poll suggested, but it was a decline on a sequential basis as expected. Revenues were down 1%, EBITDA down 6.5%, margins were lower at 49.3%, which compares with 52.2%, profits down 6.7%. They are largely higher than the poll. That is because other income was higher on a quarter-on-quarter basis to come in at 3,400 crore rupees. Now, in terms of key internals, their crude production was down 3% on a YY basis. Gas production declined 4%, and crude realization absolutely in line with estimates at $81.6 per barrel. So going forward, the crude oil movement will be key to track for ONGC, and also the production coming in from KG Basin.
Thanks a lot for that. Well, the other stock that we're watching this morning is MotoCorp. Good set of numbers coming through, largely higher than what the street was estimating. So I'm expecting the stock to be in the green. A revenue growth of 21% is what MotoCorp has reported this time at 9,723 odd crores. Even if you look at the EBITDA performance at 1,360 crores, it's higher than the poll of 1,319 crores. The margins have picked up to almost 14% versus 11.4% same time last year, and net profits are up about 5%. It's a mixed bag on the brokerage front, actually. CLSA has an outperform. They've raised their target price to 5,246, but a couple of others are a bit disappointed with the kind of margin pressure that we've seen quarter on quarter. So I'm going with green today because the numbers are better than what the street was estimating. But let's go back to Ekta to talk about Divis Labs and how the numbers looked. Ekta.
Well, it's definitely a tough one to call a color on today because Divis Labs, the numbers were weak. So revenue was up around 8.6%. Street was anticipating around 20% in terms of growth. Margins came in at 26.4%. Street was anticipating around 29% in terms of margins, and the profit at around 258 odd crores. But what the street probably would like with regards to Divis Labs this time is what they said on the call. So the GLP-1 opportunity is expected to contribute FY25 onwards. The company is supplying amino acids for these GLP-1 drugs. Remember, these big weight loss blockbuster drugs. They are confident on double-digit growth in FY25, and they have said that the custom synthesis segment has two large projects from Big Pharma. The stock is corrected around 10% from its 52-week high, trading still at punchy valuations of around 41 times FY25. So let's see which way the stock goes. Based on just what they reported, the stock should probably be in the red, but based on the commentary, maybe we could see some amount of, relief.
Okay, all right. So that's about Divis. But Ekta, tell us about Oro Pharma.
Well, yes, Aurobindo came out with what you would have to say was largely a good set of numbers. So revenue was up around 15%. Street was anticipating 16% growth. The margins were better than estimates at around 21.8%, and so was the profit. US sales were better than estimates at $451 million. The street was anticipating $420 to $437 million. US specialty and injectable revenue was $112 million, which is around 25% of their total sales. The Europe, ARV and API business was sluggish, but the US sales will probably make up for that. They do have a call at 8:30 a.m. today, so the commentary again will determine a lot of the stock moves.
All right, Ekta, thanks very much for that. Well, PI Industries also reported. Sonal has got details. Sonal.
Well, strong set of numbers at a time when the industry is talking about headwinds. The company reported revenue growth of 18%. Their EBITDA was up 34%. Margins expanded by 300 basis points and profits were up 28% as well. It was led by the exports business. That is where the company saw growth of 13% because of volume growth, and they commercialized new products as well. Domestic continues to be under pressure. But let's talk about pharma business. That is the newly acquired business. That's where it contributed 10% to the overall export growth, but it continues to be under losses. Domestic revenue was subdued with a reduction of 6% on a YY basis, and the company says in the domestic market pricing pressure could continue, but exports would continue to do well.
All right, thanks a lot for that. Well, Abhishek is with us to talk about Bundon Bank and how the numbers looked. Abhishek, over to you.
Good morning, Sonia. So it looks like slippages have made Bundon with Bundon Bank for 12 quarters in a row as they remain elevated, and quarterly annualized slippage ratio is above 4% for 12 quarters in a row. So even in this quarter, the slippages are elevated at 1,390 crore. The annualized slippage ratio is above 5%, and asset quality has deteriorated in terms of absolute value. Gross NPA is up 3%. However, as a ratio, it's down to 7.02% versus 7.32% on the back of the fact that AUM growth has been strong. Net NPA has remained under control. They have sold off some NPAs in this quarter, which has led to a write-off of 720 crore. EEB book, that is emerging entrepreneur business book, over there the stress has increased as the amount is now under stress is at 7,500 crore, up about 8.7%. The heartening fact in the result was the sustainable of net interest margin on a sequential basis. Despite elevated slippages, net interest margin has come in at 7.2% versus 7.2% in the previous quarter. This time they had funded the balance sheet via bulky or wholesale loans, wholesale deposits, which could have costed them, but they have been able to maintain the margins. However, both the P&L in terms of FANA and PAT is way below our poll. Back to you.
All right. In fact, we have the management on earnings in just a short while from now. So stay tuned for that. That's Bundon Bank. But Honasa reported a good set of numbers this time. So Mangalam is here to give us the fine print. Mangalam, over to you.
Well, it's likely to be one of the stocks of the day in today's trading session, Honasa, because of two main reasons. One, in a sector that is, parched for growth, here's a company that reported 28% growth in the top line. If you compare like for like, it's actually a 31% growth itself. The second part is that most on the street were worried about expanding margins here for the company. Well, they've gone ahead and done just that. Year on year, the EBITDA has increased by nearly 200%, and the margins have doubled from 3.1% to around 7%. And as a result of which, on a low base, the net profit has nearly tripled itself. They've reduced the ad spends as a proportion of sales by close to around 40 basis points. What's good is that they've seen a 35% volume growth. They've increased their offline reach by about 37%. And while doing so, they've also increased their market share in both the face wash and the shampoo business. What's not good, however, is that quarter on quarter, the revenue and EBITDA have seen a bit of subdued moves. The revenue has declined by 1.5%, the EBITDA by about 15%. That's largely due to one softer winter and harsh summer in the previous quarter, which led to higher sales of sunscreens and face washes. So seasonality led to quarter-on-quarter weakness, but no complaints year-on-year. Good growth seen here.
Okay, all right, Mangalam, thanks for that. In fact, we'll be chatting with the management at around 9:50 a.m. later on in the show. Let's focus on MCX though. Sudarshan joins us to tell us. Sudarshan, numbers a little bit subdued?
Yeah, so just for today, I'm going with red for MCX as headline numbers have come in below estimates. Company has reported loss of rupees 5 crore against profit of rupees 12 crore. That was an estimate. Also, it has reported EBITDA loss of rupees 20 crore against estimate of rupees 22 crore EBITDA. The important point in the MCX earnings is software expense. For this quarter, it was at rupees 146 crore, which is up 10% sequentially and 115% year-on-year. But need to note here that this was the last quarter of huge software payment. Lastly, company has shortlisted names for the post of MD and CEO, and the tenure of current CEO PS Reddy ends in early May this year.
All right, thanks a lot, Sudarshan, for that. Well, let's do a quick recap now of the top stocks with positive news flow. There's Dr. Reddy's, ONGC, Hero MotoCorp, Aurobindo Pharma, PI Industries and Honasa Consumer, while stocks with negative news flow, there's Tata Power, Divis Labs, Bundon Bank and MCX. But Sudarshan, you have more stocks on your list. There were many numbers that came in post-market hours. What stood out for you?
So I have divided these companies in two parts, good and bad. So first I'll talk about the companies that have reported weak earnings. First is Bajaj Healthcare. Revenue has slipped 18%. Also, company CFO Rupesh Nikam has resigned. Next is Paras Defense. Cost of material has increased 2 times and margin has slipped 340 bips year-on-year. Amber Enterprises has reported loss of rupees 0.5 crore against profit of rupees 15 crore year-on-year. EBITDA was flat at rupees 78.5 crore. Mishra Dhatu EBITDA has slipped 45% and margin was down 1400 bips year-on-year. Campus Activewear profit slipped 48%. EBITDA was down 39% and margin has fallen 800 bips to 11.9% year-on-year. One stock that might react positively to earnings, that is Advanced Enzymes. Revenue has risen 13% and margin is up 410 bips year-on-year.
All right, that's an interesting list, sir, but more down than up, right, in terms of year-on-year comparisons, as you pointed out. So we'll talk about some of them with our guests in just a bit from now. Thanks for that. We'll take a break. Prakash Devan will be with us and we'll throw some of these questions his way. So a conversation on markets, and then we'll be joined by the management of Stovecraft, who will be with us to discuss their third quarter performance. Stay with us.